Zapraszam na kolejne wydanie programu Prosto z Parkietu. Moim Państwa gościem będzie dzisiaj pan Borno Janekovic, prezes Templeton Asset Management Poland TFI, czyli polskiego oddziału Franklin Templeton Asset Management. Porozmawiamy o sytuacji w branży TFI i o sytuacji na rynkach finansowych. Serdecznie zapraszam.
Thank you.
Hello, Borno. Polish asset managers have been hit by a wave of redemptions over the last couple of months. Have you experienced that also in your Templeton funds?
I mean, the market was very, difficult in the last month, and I think to start it like maybe with a strong sentence, the market has killed the goose which was laying the golden eggs. And if the market is not delivering what it is promising to the clients, then long-term the clients are disappointed and are moving the money somewhere else. So I think what we are now seeing is over the next 6 months, it's going to be a clean out of the market. And I guess out of the 60 TFIs, maybe 30 will survive over the next 2 to 3 years. Mm-hmm. And the market is going to come out healthier out of it. Why it's going to be healthier? Because the fees will go down, definitely. So if the fees go down, the clients will make more money, and therefore we will get more clients. So overall, it's good for the market, but not everybody will survive, yes.
Okay, well, if you say that half of the TFIs will remain, that would be a serious change.
Yes, but again, over the next 3 years or so, let's say like that horizon. I think what you see now in the financial industry is you have this perfect storm. You have alternative products which are cheaper, ETFs. You have a regulator which is looking at many things more cautiously, and you have technology disrupting the whole industry. Mm-hmm. So we have this perfect storm, and you have many industries at the moment where this perfect storm is. You have the car industry, which is going to getting wiped away by the electric cars. You have a lot of the banks in trouble with Revolut and other digital offerings which are cheap, have no branches, all digital. And the same is happening to our industry. So the quickest and the most adaptable will survive.
Okay. And have you seen any difference between the flows to your Polish asset funds, the couple of funds that you offer only in Poland, and the one from your global offer that are available to Polish clients? Have you seen any differences here?
I mean, one thing is what we always see is a home bias. So if you live in a particular country and you can invest in that country, you will put most of your money in that country. Yeah. So the big difference is that Polish investors like to put a lot of money in Polish stocks, bonds, and that's the difference. If you look at the foreign offering, which we are now in Poland offering for most probably 12 years, there we only offer funds which are not investing in Poland. So it's hard to compare because here we have a range which is only Polish and here we have a range which is non-Polish. So all our investments from the CCAV range are all outside of Poland. So it's very difficult to compare them.
What I was thinking about is that if a client decided to withdraw their money from investment funds, if it was for the reasons somehow connected to our Polish market, let's say, I don't know, some scandals, a bear market or a bad performance of a Polish market, then they should be withdrawing cash only from the Polish assets fund and not from the...
Yeah.
That's why I'm asking.
Good question. No. The issue is always, if I look at myself or yourself, you usually take the money away from the winners and leave the losers, because we kind of hard for us to realize that we didn't do a good investment decision. So therefore, we sell the good ones too early and we stick to the bad ones too long. So I think you see a lot of redemptions in the local funds, but you also see redemptions in the CCAV ranges from Polish investors, because they need some money and they take it from the ones which have been doing well.
Yes, of course. Well, as it comes to changes in the market structure, this year, in the second half of the year, the long-awaited pension funds and the new pension funds, PPKs, will start to receive money. How do you think this scheme will change the market over time?
I think it's very important that something like this is there. There's 2-3 factors to it. One is it's good because I think till today we have around 2 million Polish accounts in funds. Let's say it's around 2 million out of 38 million people. Mm-hmm. So this will widen the people who have investment funds, which is good because in the end it's a good product, it diversifies you long term, you're going to make money. So it's good to put people into it long term. There are some risks to it which are because you are forced to deduct a little bit of your own salary as well, that people can opt out of the system. So if you make 3,000 zlotys, 4,000 zlotys, and the amount you need to deduct for something which you will get one day is your monthly train ticket, then people will think about that. So there's a little bit of an issue on that one. But overall, I think it's a very good initiative, and we need to see how people will adopt this. But in the end, everybody who works will become a fund.
Do you think that those employees who will decide not to opt out and they will save in the PPKs, and that they will somehow reduce their savings elsewhere? Because if such a substitution happens, and many scientists say that this will happen, this would be bad for those managers who don't run PPKs.
Yes.
So do you expect such a phenomenon?
We have different markets where you have these kind of savings plans. In the US, you have the 401k. There is a substitution happening, but overall, it's kind of removing the barrier of becoming a fund holder. So maybe in the beginning, people will take the money from there to the PPK, but if they stay with it long term, and this is where we see the advantages, you stay in the PPK, and after 10 years, you look at the account and suddenly you see there's some money you never realized because it was just your train ticket which was deducted, and there's some real money there. So people will start coming back into funds long term. And as we run we run a marathon, not a sprint, as Franklin Templeton. So therefore, for us, maybe short term we're going to see a deduction, but I think long term is good for the market.
Okay, so we think that that PPKs will somehow build trust.
Educate, build trust, yes. And the fees are very low. So with the 50 plus 10, people will adopt to lower fees and realize that fees are important, which they haven't realized before. So I think this will help overall the education.
Well, as it comes to low fees, not long ago the first Polish ETF opened to investors. It has been also a decade since the previous ETFs were open, but those were run by foreign managers, and they never really gained traction. Do you think that this time the Polish investors will embrace passive strategies?
I think yes. I hope yes. Passive strategies give you something which active. It's different from the active strategy, and the more we offer people, so it's about offering more than only one thing. It's better for the market, so it will develop the market. And if you compare to the US, to the UK, where the kind of regulation which is happening right now in Poland with the MiFID has happened some years ago, their passive have become more and more popular. So I think, yes, it's good for the market. Yes, it will take maybe some share from the actives, but overall, whatever is good for people to save for the long term, I think it's a good thing for the market.
And are you planning to offer some ETFs in Poland from your global...
We have a range of global ETFs. Yeah. We have not registered them yet in Poland. We are looking at it, yes. So it's not a yes that we are doing it, but we are looking at it.
Well, the problem with ETFs and general passive strategies for asset managers is that they have low management fees. In August of 2018, one of the biggest global asset managers, Fidelity, cut its management cost of the flagship passive funds to zero. So this seems like a price war. Is Franklin Templeton globally taking part in this price war?
We are not taking part in the price war, but we have also very cheap ETFs. And I think what you will see over the next years is going to be a run to zero. It's going to become a commodity. So in the end, there's even the ability to go below zero. So you could have a ETF, the next one to top or to lower that could be like -5 basis points. And they make the money on something else. And on the Fidelity one, they make the money on the account. So you cannot buy it out. So you need to be an account holder. They charge you on the account and then you get the 0.1. But in the end, it's still cheap. So I'm not saying it's expensive, but there is other ways to make money. And I think that's part of the business. And you will see a development where this thing is becoming zero. And they will charge you on asset allocation. So there is a lot of developments happening outside of Poland, unfortunately, only on the robo-advisors, where you go to a website, You enter a goal. I want to save for retirement. I want to bring my daughter in 10 years to university. I need some money there. I want to buy a fancy car. I want to buy a flat.
Yeah.
And then with these goals, they structure the portfolios using only passive, and they charge you on the structuring.
Yes, so they charge for advice.
Advice on that level. It's not possible, unfortunately, yet in Poland so well. But if the regulator would allow that, this could be an interesting development where you have a lot of young people who don't want to go to a branch, who want to use the phone to do the allocation. So we need to do that to reach, the next generation who uses Facebook, Instagram, and all that.
Okay, but do you think that from a client perspective, does it make sense to invest in active funds?
Absolutely.
At this point of time, when you have when you can use the cheap alternatives.
Why do we have the issue where a lot of people are not happy with the returns they have received over the recent years? One thing is also, if you look historically, let's say the last 80-year stock market, if you look at this and you would invest at any time, most of the times in the short term, you would have, how we call it, like a regret, because you will not be having the money you invested in. So long term, you make money on the equity market, but people usually put the money, they are minus 5%, and they redeem at that time. So therefore, ETFs per se are not going to solve the problem of people being unhappy, because they will put money, they will lose money, and they will say it doesn't work also. So the problem is that we haven't been selling the products right. And the perception of people getting 6% return without risk, 8% return without risk, that's the problem. So it's all about the education and explaining people, if you have a goal and it's in 10 years, you can start now saving and you can put in like whatever, 1,000 zlotys, you put a month, you put 10,000 zlotys, and over time you will accumulate. Is it possible with a 3%, 4%, 5% product to reach the goal? Yes, it is, or it is not. And if it's not, you need to add more money or you need to take more risk. So I think this educational part is missing, and people expect this to be a one-way road with the ETF. So what we have had in the last 10 years is this big inflows into ETF. So you got a huge distortion on the equity markets, especially where the biggest companies would get the most inflows because it's market cap weighted, the ETFs. So we have this huge distortion. One time the inflows balance out or stop, or people start redeeming with more volatility in the markets, the biggest ones will get the biggest outflows as well. And then especially active management can outperform. So if you have a market rally where one factor is working, which is market cap, and value, quality, momentum is not so in favor, yes, they will outperform. But if this changes, and we see at the moment this increased volatility spikes, then we have a range of smart beta ETFs, and they use 4 factors instead of 1. And with them, we've outperformed in the last 3 months because of the volatility. So we had a one-way market for a very long time. This market is at the moment, over the next 2 years, in a change. When it changes, then active can outperform.
I have one more question about the global industry of asset managers. I have been hearing that some of the largest asset managers in the world, they are increasingly lending directly to companies, or they are investing in some greenfield projects because they are unable to find attractive assets in the mainstream assets because of the loose monetary policy and the distortions that it caused to the market. Is it also a problem for Franklin Templeton to buy attractive assets?
I don't think for us it's a problem to buy attractive assets, because we look everywhere and we are very big in emerging markets where you don't see this crowded trade anymore. In the US you have a very crowded trade, but in emerging markets it's less. But overall you see exactly what you said, that the institutional investors, the big institutions like the endowments, the pension funds, they have this kind of 70, 30, 60, 40 strategy. 60 is passive, 40 to 30 is in high alpha generating products, which are very illiquid.
Yeah.
The good thing with these returns is they are very nice returns, but the problem is you need to lock down your money for 7 years, 12 years, 5 years. And if you create a mixture out of an equity fund, a bond fund, and something like this, you can benefit, but then you need to have the horizon. And these pension funds, they have the horizon. So it's not for everybody. Yeah.
Okay. Let me come back to the beginning of our conversation. You said that you expect some of the TFIs to go out of business. And you mentioned some structural reasons, not the market performance. So I want to make it clear. This is not because the Polish market is outperforming. This is only a reflection of the perfect storm in the industry, as you said.
I would say, yeah, it's a perfect storm plus the regulator, the MiFID implementation. So yes, it's many factors which will make the survival much more difficult than it was for the last 10 years. And not everybody will pass through that.
Okay. Thank you very much, Borno.
Pleasure.
Ja przypominam, że naszym gościem był pan Borno Janekowicz, prezes Templeton Asset Management TFI, czyli polskiego oddziału Franklin Templeton.